I like that. I didn't think of it the way you just kind of proposed it around the community aspect, because I do think a lot of this stuff gets very transactional, and that's not what I want to be at all.
Yeah, and it's not so much about transactional. One of the things that we really stress when we're investing in with people in projects, that we not only invest in the projects, but we invest in the people.
Yeah.
We're there, we're with you step by step, and we're walking along this journey. It's not so much, hey John, go make us money. No, that's not what this is about. It's more so, hey John, let's go make money together and let's help each other continue to build this community. And if there are people that are interested in finding out how to be their own deal lead, we have resources for that. If they're just interested in just being the joint venture partner, we have resources for that as well. It just depends on what people want to do.
Yeah.
You can continue to go it alone, or you can continue to take on partners and grow a community of people that are going to be investing with you that can grow together. That's one of the things that I think that Jerome has done a great job with Myers Methods, is finding people to take along the journey.
Yeah.
And step by step. So maybe in the beginning, people can't afford a big piece of equity. Maybe it's only 25,000. Then maybe the next deal that grows to 50. And then maybe when things start, growing again, 75 and 100. It's a step-by-step process. It takes a little longer, but you're building that community and you're increasing the capacity of your network to be able to invest.
Yeah, 100%. I mean, and that's something I just need to learn about, period, right? Just in general, because it's a totally different dynamic when it's just you. Mm-hmm. If you make a mistake, or the amount of documentation or anything isn't really as critical. Not that it's not important, but it's different when you're capital at risk. So no, absolutely. I mean, the next one, I definitely think I'm going to bring on partners from, whatever perspective we can figure out and make sense. But I totally agree. And I like that. I didn't think of it the way you just kind of proposed it around the community aspect, because I do think a lot of this stuff gets very transactional, and that's not what I want to be at all.
It's not so much about transactional. One of the things that we really stress when we're investing in with people in projects, that we not only invest in the projects, but we invest in the people.
Yeah.
We're there, we're with you step by step, and we're walking along this journey. It's not so much, hey John, go make us money. No, that's not what this is about. It's more so, hey John, let's go make money together and let's help each other continue to build this community. And if there are people that are interested in finding out how to be their own deal lead, we have resources for that. If they're just interested in just being the joint venture partner, we have resources for that as well. It just depends on what people want to do.
Yeah. Yeah, no, I love that.
So, hey, thank you everybody who is joining us. Welcome to the Myers Methods meetup. I'm really glad that you guys are able to join us today. Today, I have the pleasure of actually going through and interviewing and talking to John Blanton, talking about a project that he just took down recently. And it's going to be an exciting, I think he's going to have a lot of great things to share with everybody, whether you're here live, whether you're going to be listening to the recording. For those of you that don't know me, particularly those that may see this recording, my name is James Bryant. I am a multifamily investor. I've invested in several projects using the Myers Methods, working with Jerome Myers. And I had the pleasure of being asked to speak and to co-host the Mid-Atlantic Multifamily Investing Conference. And I'm so excited that we're here right now talking to John. John, how are things going?
What's up, James? It's Friday, so I'm excited to be here too. And appreciate you guys having me.
All right. Tell us a little bit about this project that you just took down, man.
Yeah. It's really exciting. I mean, we were just up there earlier this week scoping out some stuff in regards to some of the rehab plans that we have going for the project. And the nice thing is everybody feels pretty confident about it turning out. And I'm pretty excited to see, I think even by the end of next week, we should be able to see kind of some of the fruits of our labor, putting up some easy stuff, low hanging fruit, getting some of the exterior cleaned up a little bit. And, even some of the tenants, when we were there, it was really refreshing. They walked up to myself and the property manager. We didn't disclose who we were. I mean, they had mentioned that they were the property manager, and they're just like, "Are you guys with the current company?" And they're like, "No." And the woman was just like, "Oh, thank goodness," So it was so that was a nice feeling, knowing that's how they felt. But then also, I don't think they understand the changes that are coming.
Oh, that's awesome, man. That is absolutely awesome. So walk me through how you found the deal.
Yeah. So, I mean, I was just thinking about it this morning, actually. I mean, it probably started about a year ago. So I had done quite a bit of self-education. I had, of course, listened to a lot of podcasts, read a lot of books. And the biggest one, of course, was Joe Fairless's book, right? I mean, I think that's kind of like the gold standard of what everyone reads initially, right? Which is it is a great book, right? But within that book, I had the biggest thing about finding deals was building relationships with brokers. And so I started doing that, and it just really wasn't getting me anywhere. Nothing I was seeing from brokers. Deal flow was pretty stagnant as it was anyway. And then when I saw a deal, it just really didn't make sense. Which at the time, 12 months ago, some of those deals seem a lot more, meatier than they do today, right? And so even in that 12-month time frame, deals have cap rates have compressed, return profiles have compressed, and so what the expectations are. So within that, I'm personally in sales myself, and so I thought to myself, hey, if if these brokers are out there just cold calling these owners, why can't I do that? And so I just went to List Source and just started pulling different lists for small multifamily properties, 2 to I think 20 units within Alamance County, Cumberland County. It was really more around the Triangle and Fayetteville at the time were the main areas that I was targeting. And so, I mean, I still think I'm still pretty bullish on Alamance County. And so I'd actually gotten a project under contract there, 12 units in, I think it was November, or late October, early November last year. And so that kind of proved the concept, right? It was like, hey, there's opportunities out there. Fortunately, it ended up being a bridge too far. I learned a lot. I think I went in on a price that I couldn't have closed at, and that was a mistake. And so, lost a couple $1,000s in the different due diligence aspects that I had to do and things like that. But, from an education perspective, it was outstanding. And so from there, kept trying to go through the List Source list and was getting hits here and there. I'd caught a couple deals. I was trying to wholesale down in Fayetteville and down in Sanford. And after talking to some of these folks, I'm just like, man, this is a lot of work to make $5,000 or $10,000, and I've got a family, I've got a job. So, for me to drive down to Sanford, to drive to Fayetteville, to drive to these different places on the off chance that the person's going to accept, my super lowball offer, it just didn't seem like it made sense. So I think in February, I kind of made a decision with myself and just said, hey, I'm going to start having to attack this pretty aggressively and really make it more like a business instead of just a side hustle or a hobby. So, the biggest thing was I had to get my wife on board, right? So I was about to make an investment in the tooling that I needed to get me to where I needed to be. And the tools that I needed was about $4,000. And, not an astronomical amount of money, but for something that is an unproven concept, to somebody else. And so I'm just so grateful and fortunate that my wife's so supportive of me. And, not that she didn't give me flack along the way, and said, hey, well, you just, I'm telling her like, you don't need that or whatever, she's like, you just spent $4,000 on this software, like, don't tell me what I need and what I don't need. But yeah, I mean, I'm just so fortunate that I have the support of my spouse and that she was willing to really allow me to take on that journey. And so within that, I bought the software, and that's when I really was able to kick it into high gear and really start kind of, getting to the point where this was an actual process.
So in terms of getting it down to an actual process, you have the software package, you work with your wife, which I commend you on, and I absolutely do the same. And so you get there, I'm gathering that you're mining the data and you come across this particular deal that you were able to get under contract and close. So tell us a little bit more just about the specifics of this deal. How many units? What was your first thought in the condition when you saw it? And how are things going from that perspective?
Yeah, I mean, honestly, this deal was a little bit of an afterthought, right? I mean, I think it's easy to get caught up, especially in multifamily, about, bigger is better. And hey, I need 100 units. I need 150 units. I need 200 units. So this one was an afterthought. So, the way the software tool works, you really have to massage the data a little bit to get what you want out of it, which I think is why, I've been able to have success, whereas I've spoken to quite a few other peers and they're struggling with it a little bit. So actually when I came across this property, it was actually a lot smaller than I had even expected, because the square footage measurement was just of one building, not of two. And so for me, it was almost just like, hey, let me see. It's not going to hurt me to get more experience talking to more sellers, right? Mm-hmm. So I just looked at it as a learning opportunity. It wasn't even like I saw it and I was like, oh my gosh, this is going to be such an amazing deal. It was more just like, hey, here's another seller. This one looks practical. Maybe I can wholesale it or whatever. Maybe I could throw out a really lowball offer. So when I pulled it up, I looked at it, looked at the crime map, and I was like, this isn't the cleanest area in the world, right? I mean, it's not a bad area by any means, but there's definitely some dark blue areas, right, on the crime map. And so that kind of, even within that, I was like, whatever. Well, let me just see where it can go. And so I talked to the woman, and I mean, geez, that's the other thing. I mean, the timeline takes a while, right? I mean, I think this conversation I had with the woman initially was either late July or early August. I mean, so we're just in November now. I mean, so, tip to tail, I mean, that's a good 5 months, that we were figuring this out. So I talked to the woman, and just, it was a very cordial conversation, I mean, and that's, I think, one of the things that I'm, good at is just really humanizing the conversation and building rapport quickly. Right. And so I think that was the nice thing. And so I said, hey, have you thought about selling this thing? And she's like, well, yeah, somebody just asked me that this week, but I'm not totally sure, blah, blah, blah. So I said, okay, well, send me whatever information you have, and I'd love to follow up with you. I don't know. She's always on vacation somewhere. She's like, I'm in the mountains, and then, whatever. So a week goes by, no information from her. Follow up with her and say, hey, do you have any information? Oh yeah, sure, I'll send it right to you. A couple days go by. Of course, nothing comes in, and so then I follow up with her again. I'm like, hey, do you have this? Oh yeah, I'm so sorry. And that was one thing that I think kind of was telling in the process, is she was very apologetic. So I could tell that she was an empathetic person, and that she, I had the feeling that she wanted to, legitimately make this work if it made sense for her. And so then just kept following up with her. She got me the financial information. When we saw the financials, I mean, I think this is the most, the craziest part, when we saw so let me back up a little bit. So she actually said, hey, I've got that one property that we were talking about, but I've also actually got another property that I'd like to dispose of at the same time. So I wasn't even aware of that. Right. So I haven't even done the research to the point knowing. So I was like, oh, hey, like if I can get both of them at a good enough price, like, of course I'll just buy both of them. Or, even in my head, I was thinking if I could only get one at a price that I liked, but I could, at least break even on the other one, and it just would make the process smoother. Cause she had told me, hey, I want to get rid of both of these. So, I said, hey, I've got to figure out a way to buy both of them. Otherwise she may not be willing to do the deal. So yeah, we've got the two properties. We ended up getting the financials. She had sent those over to me, and they were actually a lot cleaner than we had expected. Anyways, went through, really was trying to figure out where to present an offer at from, from a per door price. I mean, that's kind of how I back into these things. I know NOI is a big one and all that stuff, but, at the end of the day, it's just really easy kind of off the cuff to price per door, and so that's kind of how we look at it, is pricing it per door. Of course, when you get into the financing side and, different things, but I mean, cap rates are a little bit loaded, right? Because you have to look at the entire project. You can't just say, oh, this traded at 5 cap. Well, the upside is to, increase NOI by 20 or 30%, but you buy something at a 7, but it's going to stagnate. So that's why I think cap rates and NOI are a little bit challenging sometimes. And especially that has to determine the level of management, and how well that management is performing on the property. So that was the biggest challenge, was, well, what number am I going to put on paper to give to this woman, right? That's going to make sense, right? I don't want to overcommit myself and give a number that's too great, but at the same time, I don't want to give a number that's too low that she's offended and says, hey, this guy's a jokester. Like, this is a waste of my time. So Jerome and I went back and forth on it. Of course, I was like, man, that's crazy low. She's going to be like, no way, man. Like, what are you talking about? But we had valid arguments as to why. Like, so for the 4 unit, it was ran extremely poorly. I think the NOI was like $4,000, $4,500. We could have taken some stuff out of that, for CapEx repairs and stuff like that, but it was still low, right? I mean, it was still a pretty low cap rate. And the other one was actually performing really well. 2019, it performed poorly, but 2020, it was actually performing extremely strong, even throughout COVID. And so, he finally convinced me, under, much duress, saying, hey, let's just go in at tax value. And so of course I couldn't do that. So I went in just above tax value. It was crazy. So this is probably the best part of the story. So I tell her, he's like, hey, just give her a 24-hour deadline. I'm like, I'm not going to do that. There's like an old lady, sweet little old lady. Like, she's telling me about her daughter and her puppy and all this stuff, right? We've got a good rapport going on. Like, I'll be respectful and let me give her, this is Thursday. So let me give her till Sunday, end of day, right? At 5 p.m. on Sunday. So I send her the LOI. She sends me back immediately. Hey, can we talk Monday? I'm like, oh, that's fine. Whatever, boom, already given a concession, right? A concession that has no value to me, but hopefully that'll be, a kind of an opportunity in the negotiation process. Mm-hmm. So of course, Monday comes around. I'm kind of on pins and needles. Noon rolls by. I don't hear anything. 2:00 rolls by. I don't hear anything. 4:00 rolls by. I'm just like, man, like this is getting kind of down to the wire. 5:00 rolls by. Of course, don't hear anything from her at all. I'm like, you know what? The deadline already passed. What's the point in kind of trying to harass her now or kind of hit her up? I'm just going to give it till tomorrow. So I ended up calling her Tuesday morning and just said, hey, just wanted to check in. Did you receive the offer? Did you have ample time to think about it? She's like, oh my gosh, I was out of town again. I had this trip that just was amazing and I had to take it and I hadn't even really had a chance to review it yet. I'm like, all right, I totally understand. Appreciate you getting back to me. Let's sync up later this week. She's like, okay, yeah, let's just sync up, whatever. I think it was the next day. And so we sync up and she's like looking at it, we're talking and she's like, no, I think this is fair. Yeah, I'll sign it. Let's do it. No, it just like fell back in my chair. I'm just like, oh my goodness. Like she didn't even counter me or anything. So, I think that was the part in the process that was amazing. It was just, that it was just crazy that I had this limiting belief of what was possible or what she wanted and what her motivations were. And instead of using those assumptions or working with those assumptions, I went against my own better judgment, thankfully, and just rolled with it. And it ended up working out very well in my favor.
No, that is awesome. I know when we've gone in to purchase projects, Jerome and I often go back and forth on the price. And if you think his price was low, John, be glad that I wasn't on those meetings because I would have probably been a little bit lower. And you may have offended the lady with my price, but I'm glad that it worked out and that, just being consistent in your process and pulling in mentors and coaches and working with Jerome and having someone to bounce these ideals off with, having someone in your corner to be able to say, no, this is what I think and why. I find that very helpful. How helpful was that for you?
Yeah, that was tremendous. So I think, one of the challenges that I struggle with is that I am a very motivated person. I feel like, I'm capable of pretty much anything that I set my mind to. So I think that's one thing that I struggle with in general is, well, I don't need a mentor. I don't need advice. Like I got this, like, of course I'm going to make mistakes. I'm not thinking that I'm impervious to mistakes, but I'll figure it out. Right. And I think that's, just even in the differentiation of actually calling sellers, right? I'm not just talking to brokers, right? So I'm trying to do something a little bit different. But I've learned over time that only gets you so far. And there's a lot more mistakes that you'll make. And the outcome of the mistakes will add up, sequentially and overtake the amount. So my wife even called me out on it. She was like, well, oh my gosh, you're paying this much, blah, blah, blah. And I was like, well, he saved me $15,000. So I can put a number to it. Right. So then she's like, oh, well, and I'm like, how much did your beauty products save you? No, I'm just, well, how it gets. But yeah. So, I think that's the thing is, that's what I said. I think I was going to offer 535. He said, no, 505 or 500. I think he said 500 because I think that was tax value. So I did 520. So, just even in that, in that negotiation, he was able to get one over on me and get me to come down on price $15,000. So, that instantly saved me $15,000. Of course, I wouldn't have been out of pocket because there's a loan. Mm-hmm. But when I go to exit the property or when I go to refi the property, that is $15,000 or, whatever close to that will fall into my pocket. So I think that's the biggest thing is you have to look at the opportunity cost and the value, right? It's not the cost, it's the value. And I think that's where I'm getting better at understanding value versus cost. Because, nobody wants to spend money on something that they think they can do on their own. But but like you said, the other part of it is also being able to bounce ideas off of somebody. So even if I'm, there's been plenty of times where he's given me advice and I haven't followed through with it. Right. My wife's like, why'd you even ask him? And it's just like, well, sometimes it's good just to at least have someone to bounce ideas off of. And, one of the best points he's made to me is around being able to have a vested interest. Right. So say I ask somebody's opinion and they give me their opinion and it goes totally awry, right? I lose money or it doesn't end up working out. And then I go back to that person and I say, hey, like this didn't work out. What's the deal? And they're like, well, you just asked my advice. Like, what do you want from me? I gave you my best advice. And so did they really take the time and spend the effort to have a critical thought on what the best response would be? Or did they just off the cuff say, hey, you should do this? So I think that's the other thing that's really important is when you do pay somebody, the right person, don't get me wrong, there's plenty of wrong people out there. So you have to make the effort to find the right person. But when you do, I do think the value overcomes the cost of the process. The only difference is you have to be willing to put in the work to get there. And I think that's the thing is Jerome's been there to help and assist and bring me up, but he has not done, any of the work in regards to actually, finding, locating. I mean, I guess, okay, that's wrong. He helped me find some numbers that we're going to start banging down the doors on some folks, some other properties in Greensboro. But as far as the actual effort, he's just there to kind of champion me and bring me and help me along in the process. But as far as the actual effort, which I appreciate, right? It's not like he's trying to handhold me. It's like, hey man, like I'm guardrails here to make sure that you're staying on the straight and narrow as much as possible, to be as successful and as efficiently as possible.
No, that's awesome, man. It is awesome to really being able to realize that value, being able to point to a quantifiable dollar amount that you saved through, the working with this process. And then there's one thing that you speak about, it's inherent in what you're talking about, but it's not explicitly stated. It's the knowledge that you learned through this process. It's not just about this deal, right? It's about the next deal and you thinking, well, am I going to offer tax value? Am I going to do this? Well, maybe I won't. Maybe that was a limiting belief that I had. If I look back at my experience, maybe I'll offer here. And so it's not just about the money that you saved on this deal, but think about the money that you'll be able to save with your acquired knowledge in many of the deals that you're going to do in the future. It's very similar to the compound effect when we start talking about the small changes that we make in our habits and the results that it can have in our lives. The same thing here. It's a compound effect of getting consistent coaching, a compound effect of getting wise advice as it's coming to your real estate transactions. And that compound effect will continue to make you money and make you wealthy throughout the rest of your life.
Absolutely. And I mean, one thought that I've had recently that just kind of, I feel like a lot of people struggle with is, most people go in and they spend quite a bit on education earlier in life. And the amount of money, and a lot of people do still, they'll read, they'll listen to podcasts, they'll do other things, but the amount of actual income or money or means that they're actually putting towards education is minimal, and especially a drop in the bucket in comparison to what they had spent earlier in life. And I think that's just really interesting. And that's something that I was doing myself and thinking about all the money that I'd spent. And it's funny, if I had to put an ROI on the money that I spent on college versus an ROI on the money I spent on coaching, I mean, it's not even close, right? And so I think that's kind of the ironic thing that I'm sure a lot of, listeners and audience are struggling with is like, well, I already spent all this money on this education. And, I don't want to get into a huge argument around, higher education and all that stuff. But
the reality, John, is that when we go to school, we get our education, we get a well-rounded education. We're trying to find something that we may want to do, right? We're exploring our interests. When you get to this point in life, you're laser focused on what you want to do. You're saying, I want to do multifamily. I want to grow. I want to generate wealth. I want to positively impact the lives of people. I want to be able to show people all of the things that they can do in this space. So when you're laser focused on what you want to do, then you're able to then justify the cost or justify what you want to do in terms of education, because it's much more narrow than what we went through in college.
No, I mean, I think I'm very fortunate for the process. And I think it did, like you said, back to the point earlier around making sure that it's a learning process. Yeah, I mean, the education that I've gained from this is invaluable and will only help me moving forward. Absolutely.
So you make the offer, she accepts the offer, You go through and you do your due diligence. What was the hiccup that happened during due diligence? Because there's always something that pops up.
Well, you glossed over some stuff. You don't think I was freaking out after she accepted the offer? I'm like, oh my gosh, like this lady, like, she's going to call her attorney and say this guy swindled her, like this telemarketer from who knows, from Southern, my area code's not even from North Carolina. They're like, who knows if the guy's from China or, Russia, where is he from? What's going on here? So that was the biggest concern was initially, this is like day after, and Jerome really had to talk me off the ledge, and the anxiety did not leave me, until Monday, until the deal closed, right? Just because it was so serendipitous. And so I think that's a lot of things that people don't understand is it takes a lot of fortitude mentally. And there's a lot of emotional roller coasters, regardless of how simple and smooth the process is. Outside of the mental roadblocks that I put in my head, this due diligence is pretty much as streamlined as it could be. Right. The woman was extremely communicative. The woman was extremely helpful. Pretty much anything I asked of her, so the biggest hiccup was the current property manager was a little bit of a stick in the mud, and he was extremely offended that she did not list the property with him or alert him that it was being sold or anything. Right. So all she said was like, hey, I'm under contract to sell this property. Send them all the financial information. Right. So the first time I talked to him, he was like, who is this guy? What is going on? So with my sales background and just in general, I had to massage that relationship a little bit. Hey, here's the situation. Here's what's going on. So I guess that was the biggest challenge. But honestly, the property is in very good shape. Kind of especially, if you look at the price that we were able to secure it at, but,
looking at how many doors is it, John?
Yeah, so that was one thing that I know I've talked about it before, but I'll just mention it real quick. So it ended up being a 14 unit and a 4 unit, but at the time of purchase and at the time we had accepted the LOI, we thought it was only 12 units. So he sends me the rent roll because when he sent me the financials, all he sent me was the P&L, right? Mm-hmm. And so I just backtracked it and said, based off of the square footage and based off of his website, right? Based off the property manager's website, it said 1,200 square feet per unit, right? So I would assume that, the property that they're managing, they understand the size of the units. So it ended up, the units were not 1,200 square feet. The units were 920 square feet. Yeah. So we ended up realizing that it was actually 14 units, not 12. And so when she realized that, because we kept talking about 12 so she didn't even know how many units the property was, right? Because I kept saying 12, she kept saying, and then at the end it was 14. And she's like, I just want to make sure we're seeing talking about the same property, because then she came back to me the day after we had gone through some of the stuff. She's like, oh, because I got another offer. I just want to make sure that, and of course then I'm freaking myself out because I'm just like, oh my gosh, she's going to call her attorney again and say this guy duped her or whatever. And I even sat down with my attorney and I said, he's like, there's nothing in the law that states that negligence. He's like, this woman is extremely sophisticated. She's worth a lot of money, right? She liquidated a lot of property last year. She liquidated 160 units last year. So she's sophisticated enough. She had talked to her CPA prior to the sale, asking about what the tax implications would be. She had enough loss carry forward that she actually isn't going to end up paying any taxes on the transaction. She said she doesn't want to list it with a broker because she doesn't want to have to do any work. She didn't want to have to go through the headache of listing with a broker. So she knew, so she was sophisticated, but it still messed with me. But as far as due diligence goes, I think the biggest thing was the appraisal took a little bit longer than expected. And then I had to go back to her and have her sign an extension for the contract on the quad. The contract we had signed for the 14 unit was 75 days. So, that seemed reasonable, but for the quad, it was 60 days, but she wanted to end up closing them at the exact same time. So we could have closed within the contract duration, but she said she was comfortable signing an extension. So I guarantee there will never be a due diligence that is smooth and streamlined as this one was. But I guess back to the point around the basis that we picked up the property at and the price point, I think, it was kind of irrelevant on the challenges we found. Even if we found that $100,000 bogey in there, we would have still pursued the project. So I think that's just kind of the moral of the story is it's worth putting in extra effort to try to find these diamonds in the rough. Again, I wasn't looking for a diamond. I was just looking for a grain of sand. And that's how this ended up turning out that way. So I think that's the most telling and the biggest lesson learned for me is I'm going to keep playing for those singles and know that, every once in a while, something's just going to work out in your favor. And, maybe the person that's selling the 5 unit or the triplex ends up owning 100 units and they're really sick and tired of it, and you can work out some sweetheart seller finance deal, or they just are really, really willing to unload it at a low price. So I think that's the biggest lesson learned is keep your basis low. And, if you go in at a price you're willing to close at, then I mean, due diligence is only going to go so far. Cause I mean, our modeling, I think was 150,000 in CapEx on purchase anyway. Right. So,
Mm-hmm.
I mean, it was unlikely the variance was going to be more than, 30%. Right. So even if it went to 200, okay, well, the basis is still pretty strong versus the value of the asset. So,
So
but
what was the total purchase price?
after we did the inspection, I had to call her and be like, hey, we found this in the inspection, we need some money off. Right. And so I was of course nervous about that conversation just because it was like, she's going to go tell me to kick rocks, which at the end of the day, it would have been fine. Right. It wouldn't have changed the outcome of the deal. But that was one of the parts of the conversation where I'm just like, man, this lady just does not, this is just irrelevant to her, like this money just, it doesn't matter, because I was just like, hey, I need $5,000 off the quad. I need 10 grand off this. And honestly, I could have got her for even more, not because I'm saying I'm such a good salesperson, but I think she just was ready. She had mentally moved on. Right. And I
Mm-hmm.
think it was just like, I was like, I'm counting my blessings, 15 grand on a 5-minute phone call. I'll take that, like that seems fair. And so I think, I could have gotten her for more, but it was getting, at that point it was like, what's the point in trying to, mess up something that's already working, and her and I have a good rapport. To me, that was worth more than five. If I got her for another $5,000 or $10,000, but it offended her, would that have messed up the process potentially? So
Mm-hmm.
so it ended up, so 520 was the LOI price, and then 505 ended up being 390 for the 14 unit, and then 115 for the quad.
Okay. And what are the current rents, or what were the rents when you purchased?
Yeah, so I mean, that's what everyone keeps saying. They're like, "This is fully occupied. This is fully." Yeah, it's not. It's not a distressed asset by any means. I
Mm-hmm.
mean, it's a fully stabilized asset. Is there upside in it? Absolutely, it's a value add deal, but it's entirely stabilized. I mean, of course, there's some wear and tear,
Yeah.
and wasn't putting money into it like she should have. But so the average rents on the 14 are about $600 a month right now. So I can't. What's that, like 9,000, something like
Mm-hmm.
that. So I mean, it's almost. It's definitely over the 2% rule, but it's not, it's almost 3%. So I did not get to the 3% rule. So, that's the one. But then on the quad, it's 600 a door right now. So yeah, I guess that's just north of 2% as well. So, I mean, in this day and age, with as hot as multifamily is, regardless of the asset size, definitely pretty excited about the basis versus, the current rents.
Okay. No, that's awesome. One of the things we talk about in Myers Methods is making sure that you buy right. And if you're able to buy at the right price, then you're able to absorb some of these other hiccups that may have occurred. In your case, it didn't occur, or at least not yet.
Not yet. I
But
like that. Not yet. I mean, there's going to be something that comes up, I mean, when we were there for the due diligence, the cops rolled up, when they were door knocking and stuff. So, I mean, I mean, it is what it is. Right. So, but I mean,
yeah,
you're absolutely right. I think that's the best point is nothing's happened yet, but am I naive to think that nothing won't? No, of course, something is going to come up. Some expense that I was unaware of is most likely. And if not on this project, of course, on a future project.
yeah, yeah. Those things always come up, but you want to make sure that you're well capitalized and that you're able to handle them. So you buy right, make sure that you're capitalized and you're good to go, man. Congratulations, John. It is awesome to celebrate with you closing your first deal. That's awesome. Does anybody have any questions for John? We're going to put John on the hot seat.
Bring it. Bring it.
Yeah, I had a question, John. So when you were searching for this property, did you have a specific class in mind? And what would you say the class of this property was?
I mean, so I didn't really necessarily have a specific class. I guess I was just looking for, less central areas, right? So, I mean, I was looking in Guilford County. I was looking in Forsyth County. I was looking in Alamance County. I was looking in Harnett County. So, I'm looking in kind of these, secondary markets within North Carolina, right? And I mean, the crazy thing, I mean, Greensboro is an outstanding market. But I mean, if it was close to downtown, I wasn't spending as much time on it. Things like that, right? Because there's just a more, the appeal's more there, and it's an easier sell to be like, hey, this is downtown. Like, it's just a different conversation with the seller. As far as the class of property that I was targeting, I mean, B minus to C. Maybe I'd go into C minus territories. I mean, I wouldn't want to be in war zone. I'd actually had made an offer on the property in Northeast Greensboro and was trying to negotiate on it. And there was a murder on the property, within the last 18 months. And it was in really bad shape. I mean, it just had, 2-foot potholes in it. One of the units was condemned. and looking back, that was 34 units. And looking back, I was trying to pick those up at like, I think 56 a door, and I got these for half that price. Yeah. And these are turnkey, right? I mean, not, I'm not going to keep them turnkey, but they are turnkey. So I think that's the thing, back to James's point earlier about, the buying it right. Regardless of what the market is saying, you have to look at what the reality of the situation is. And I think that's why that other deal looked like a deal, was because the market is crazy. But that specific sub-market within Greensboro was a little bit rougher, and it was off of a main street. This one's a nice little neighborhood. It's actually extremely private. I know Jerome doesn't like the fact that it's a little close to a graveyard, but honestly, like, ever since he said that, like, I'm like, man, there's a graveyard across the street from my neighborhood. There's a graveyard over here. There's a graveyard over. So anyways, I got it. It's you
got to be able to put people somewhere.
but it is funny. Every time I see one, I think of that comment. So, but I mean, not in a bad way, just because I mean, I think it is clear. I mean, that's something I never thought about, right? And so I think that's the thing. There's just so many variables, but yeah, so I wasn't necessarily targeting anything in particular. It was just, I started off with, hey, if they haven't sold the property in 10 years, there's going to be some more draw for them selling it versus if they bought it in the last couple of years. But even that, Jerome and I had a conversation about that. I guess that's some next level stuff. So I guess I'll share that for the book, or leave that for the book, or what, or whatever. But even, Jerome's point was that I really appreciated, was like, even if somebody bought something within the last few years, doesn't necessarily mean that they're succeeding in their business plan. And so I think back to the point about, just looking at those singles, well, even if I pick it up for the same price they bought it for in 2018, the likelihood is, if they're breaking even on it and they're extremely frustrated with it, that's probably a pretty good price in today's market. And so I think that's just kind of, in regards to, not looking at things.
We would always advise you to buy it cheaper, drive the price
down. Right. No, and I totally understand that. I'm just saying that, if, depending on, I'm just saying, like, I'm trying not to keep my eyes.
I understand what you're saying, and Jerome would probably chime in and agree. I would be the one saying, I think we can get a little bit more off. I think we can make our offer a little bit less, because you never know what other things we are going to be expecting. Thanks for answering that question. Anybody else have any questions or comments for John?
No, I mean, I guess the biggest takeaway for me from this whole thing is just, I think the limiting belief of me being capable of doing something, that like this. Right. And I think that, so I'm very fortunate. I do work a full-time job that does compensate me fairly well, but there is still a limiting belief there, thinking that, can I do this for myself? Say that job went away, say that, I'm in sales, right? So my wife and I, so is my wife. So we always joke all the time. We're like, we have no tangible skills except, being able to BS, right? That's the only skill that we have, is being able to gab. And so I think that was the biggest takeaway for everybody, regardless of your income, whatever the case is. It was just so empowering to do something. And honestly, the amount of money is irrelevant. It's great and it's exciting, but the fact that I did this means 10 times more to me than any amount of money. And I think that's why it stuck with me so much. And I was freaking out so much about actually making it happen, was because I didn't want it to mess up, because I was so tickled and proud of myself for being able to accomplish something like that. So I think, like, the money's great, but I think at the end of the day, and this is what I'm learning, and again, like I said, I'm very fortunate. So I'm not trying to say that there isn't struggle or pain in the world, but I'm just saying, like, you have to do it because you love doing deals and this motivates you, because if you don't, you're going to get burnt out. And I think that's what I see from too many people. But yeah, like I said, the biggest thing is, it just really built up in my mind that I was capable of doing something outside of just being successful in a W-2 career. And I think that was just empowering, because now I just feel so much more free. And I hate to say it, but less fearful of what does the unknown face. And I think that's the biggest thing in all of this, is that I can just rest assured, no matter what happens tomorrow with my job, with anything, that I'll be able to find a way to make it out. And, if I can spin something like this up with not spending as much time as I really should have on it, for the return, what could I do when I actually put my full force effort, into kind of trying to do something like this. I would really hope for all the listeners in the audience to just know that doing something like this isn't about the money. It's about the empowerment that it's going to allow you to have the understanding that you have this capability and that you can do even more within your life.
All right. So you had a 40 unit that you were pursuing that you were really excited about and disappointed because we lost it in the end. They sold it to somebody else. In hindsight, was that as good of a deal as what you were able to take down now?
I mean, absolutely not. I mean, definitely not as good of a deal as this one. I still think it was a reasonable deal. But what the exit would look like, there's just so many assumptions you have to make in this game. Right. And I think that's the nice thing about buying something that you're so under the, replacement cost basis, whatever the appraised value of it is. And with that particular deal, it definitely would have been a lot stickier. Right. I mean, so that was a lot of lessons learned for me this deal was almost like 50, 60 cents on the dollar. Right. And even then the lenders were like kind of giving me a hard time about it, and so that deal in Winston, a lot worse vacancy, a lot more CapEx. And not only that, but it was 5 separate buildings, right? The parking lot had some issues. Loved the submarket. Love that deal. That's one that I'm probably going to keep my eyes on because I still think that's a solid deal. But at the price point, I think it would have been a lot more difficult to take it down. And then also just from a first deal perspective, I don't have these relationships with lenders, contractors, all these things where it's just like boom, 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 boom. Like there's that person that like, hey, the 11th hour, I need them to come in with the Hail Mary to make it happen for me. So, I definitely was disappointed about that one, but I think putting one on the board makes it a lot easier to walk away from deals. I think that's the risky part with somebody starting off is you're so hungry to put that shingle on the wall and say, hey, I did one, that you start pressing and pushing yourselves into uncomfortable and unnecessary risks. And so I think that was the best thing about this deal working out for me, that it ended up in that I think things happen for a reason, and I think it ended up working out in the right way. But yeah, absolutely. That deal doesn't make sense, but to be fair, there is a deal that's a comp that's listed right down the street at $90K a door. So we were projecting $60K a door exit on that deal. So if we got $90K a door, that thing would have been a home run, but it definitely had some hair on it. I don't think they're going to get $90K a door on that other deal, but that definitely kicked me a little bit when I saw that they had listed at that, but it is what it is. I'm not sure if that seller would have sold to me anyways. They had a comfort level with somebody else, and I think they paid cash for the deal anyway. So I don't have $1.5 million in cash that I can throw down on a deal like that. Plus, I think there's going to be some pain. So like you said, maybe we can spin back on that deal in 6 or 12 months when they have some vacancy and some CapEx challenges and pick it up for a couple $100,000 more, less than they paid for it.
Yeah. Buy it for loan amount. So there's a lot of things I was able to watch along the way, and there's a couple of things I want to pull out because I think they're beneficial for a lot of people. I think the first one that we should go down is, as soon as you close, you said, I'm so glad I don't have to worry about investors. Now, you've been a passive in a few deals, but this one, you did this solo. You bought this one solo, and a lot of people don't buy deals solo, but you bought this one solo. Why'd you feel like you were glad you didn't have to worry about investors?
Yeah. So, the reason that I was happy that I didn't have investors is if I have my own money into the deal and I lose the money, like it is what it is, right? That's me personally making a bad mistake. But if I take and put somebody else's money into a deal, I feel that I have to have the ability to actually pay that money back if I were to lose it, right? To me, there's nothing more important than borrowing somebody's money to do an investment. And I don't know. I just have like a moral obligation. I know a lot of other people don't see it that way, but I feel like I have a moral obligation to be able to repay them for that debt because they trusted me with that money. And so the reason that I said that I was happy I didn't have any investors in on this deal, well, first of all, is because it's pretty fat. So I didn't want to share. But secondly, the reason I said it wasn't because of that, but it was more so because of the fact that I was happy that if I made a mistake, if I stubbed my toe, if I overlooked something within the inspection report, because there was a foundation issue. It's built in 1969, right? So it's 50 years old, right? So there's a chance there's something hidden in there, a dead body or, whatever, something crazy. And so I think that was why I was happy that I didn't have investors in the deal, because this is giving me a great opportunity to learn, make mistakes, make silly mistakes, overspend on things that I shouldn't have. And all that it impacts is me. Right. It's not impacting other people. And so I think that was one of the reasons that I had said that, just because, and I'm just, like I said, I'm fortunate. We had been loading up for a while. Since the middle of 2019, waiting for some type of downturn and some type of opportunity. So, the market's been good to us. So we were able to refinance our house and have a HELOC against it to help with some of the down payment and everything. So, but that was the biggest reason, was just because I know I'm going to make mistakes and plenty of them. And it's nice to be able to do that and have it just negatively impact myself versus other people that are trusting me with their hard-earned money.
I think that for me, we're lockstep there. And we talked a little bit about it, I guess it was 2 days ago, when we were on site at your property, and we were discussing non-recourse versus recourse loans, and how some people will say, oh, well, it's a non-recourse loan, it doesn't matter. And you said, well, if you're not willing to personally guarantee it, maybe you shouldn't borrow the money. And so if you would share a little bit there on, your thoughts on why it's important to be that way. I'm sure similar to what you just said, but maybe a little bit different.
Yeah, well, just so for the listeners, in case, recourse versus non-recourse. So recourse is that I'm personally guaranteed. So if this loan were to go bad and the collateral of the property were not to be able to repay the debt, then I would be personally liable. Me and my wife would be personally liable to repay that debt. So, thankfully I'm not worried about that in this situation, whereas non-recourse would be, they couldn't come after you personally, except for fraud. So there are some carve outs, there are some scenarios where they can still come after you, but assuming you're just negligent, they can't come after you, versus fraudulent. I think that just goes back to the previous point that I made around the morality. Like, I just think that if you're saying you're willing to do a deal that, and this isn't meant to be, I think the business plan dictates what debt is best for the deal, right? If it's a long-term buy and hold and you got it at a good basis and you can lock in long-term fixed debt with, IO, then hey, all day long, I think that's a great strategy. If you're planning on, I guess the new term is the legacy hold, right? The long-term hold. The reality is, in this market, it's unlikely you're going to pick something up at that level of discount that you can do the legacy hold off the bat, right? And so the reason that I was saying, I think it's just not for me. I don't want to put judgment on anything, but it's just not for me, because if I didn't think this deal was going to work, and if I thought that I had a chance to, put myself, my family, my personal residence at risk for this deal, I wouldn't have done it. And so within that, how is that any different than me being willing to do that with investor money? And I think the argument that you always hear is, well, this is an investment. It's inherently risky. And that's fine. And I understand that. I'm just saying that's not for me. That's not the type of investments that I want to make. To me, that's more like the startup game, right? It's like the, 1 in 100 make it. It's like, you're just kind of throwing darts. That's just not who I want to be and what I want to do. So again, not saying I would never take on non-recourse debt on a deal. I'm just saying it's got to make sense and it's got to be the right fit for the business plan. But if it had to be recourse, then I'm totally comfortable with that. And the other thing is, I think people poo-poo a lot of the terms on the non-recourse loans. So get this, on this debt, so it's 20-year amortization, right? Of course, I wish it was 25. It's a smaller deal. It's an older deal, right? 25, 30-year amortization would be better, of course. But if somebody came to me tomorrow with an offer that was just irrefutable, I could say yes, and guess how much I have to pay? 0 in prepay penalty. And so I think that's the biggest thing about the non-recourse debt, is it hamstrings you a little bit in regards to your exit strategies. Right now, I could refinance tomorrow and pay a small prepayment penalty. I could, just ride out the note, or I could sell it. And so I've got multiple exit strategies. When you do the long-term fixed Freddie Fannie agency debt, non-recourse, it's great that they can't come after you, but you and your investors are locked into a specific business plan to an extent. And I think a lot of I don't know how to say thesis plural, but a lot of the ideas out there right now are talking about compression during these type of economic events, and everybody's seeking yield and cash flow, and commercial real estate's a great place to find that. So my point is, if the economy and everything's going to get worse, if it's going to be harder to find yield and cap rates are going to continue to compress, if you're looking to exit in the next 18 to 36 months, but you've got yield maintenance on your deal, and it's tied to all these different things, you can't exit, right? And so I think that's the thing that people are talking about, non-recourse and all these other things, they're not understanding. And not only that, but how many of these educators have been around longer than 5 years or a cycle?
That's phenomenal. So in this process, you started a podcast, right? It's Contrarian Cash Flow. Talk a little bit about that process. Talk about the doors that it's kind of open for you and where you see it going, because James is getting ready to be a guest. I was fortunate enough to be the first guest, but kind of walk us down that journey and kind of close it out with that.
Yeah, well, I think the question you asked me in my response was probably, kind of an impetus for the podcast, right? I never thought I'd have a podcast. And honestly, it's like one of the best things that I've ever done. It's just amazing. And it's not because of the guests I've had, they've been amazing, but it's just, from a personal growth perspective, it's just been outstanding. I've just been able to push myself in a direction that I've never been to. It's so uncomfortable to, listen to yourself on a podcast. You're just like, oh my gosh, my voice is so squeaky and high pitched. And, and now thankfully, after listening to probably 30 or 40 hours of myself talking, it doesn't sound as bad as it had previously. So, the impetus of the podcast was around me interacting with a lot of friends and peers that would have what they deemed as a successful level of income, a successful level of means, a career that people aspire to. And it was unfortunate because I'm in sales, right? So sales, you can make a lot of money, but you can also not make very much money. And, people don't really hold sales in a high regard, right? Versus an attorney, a doctor, a dentist, whatever the case is, these kind of sought after careers. And so, but the conversation I kept having with all these friends is they said that they were as disgruntled and disappointed in their career as I was, and not disgruntled. Again, I'm very fortunate, but I'm just saying, like, it felt like there had to be more. A lot of money, the biggest purpose and most fulfillment in my life. And talking to these folks that like one dude's a data scientist, right? It's like, who wouldn't want to be a data scientist right now? Like, that's kind of like, one of the top careers that you can have. And he's like, dude, it's like, I'm just in this lab all day, just running all these configurations. And it is what it is. And so that was really disappointing, right? I mean, I hate to go back to Think and Grow Rich, but that's really, if you haven't read that book, you need to, hang up right now and go start jumping into it, because it's just amazing. Right. And I think that's what the biggest point of all of this is that it's all about around mindset. And so that's why the tagline is think different, earn different, live fulfilled, because the point of, at least for me, and I hope everybody else, is to try to live as fulfilled life as possible and give back, and so that's what's just important to me. So, but yeah, that's like really the reason behind it, for sure.
Got it. And I think the final point I'd like to touch on is getting away from door count and talking about net worth. You and I have been having this conversation for the past 2 weeks. So, if you will, lend your thoughts on that, because, there's cash flow, that's one piece, but you grow wealth through getting equity and growing your net worth. So go down that path if you don't mind.
Yeah, I think it's all relative, right? And that's the thing. And I think it goes back to portraying who you truly are as a person. My net worth does not define me. This deal does not define me. Who I am to my kids, to my wife, to my friends, that's really what defines me. And so I think my challenge with people trying to build up who they are by their door count, by the value of their portfolio, is I feel like they're trying to be dishonest on who they really are and what they've actually accomplished. And so I think that's really why I don't like that. And that's not what I'll ever do, nor will I ever champion my net worth. Obviously if somebody's getting on me, I'll be like, hey dude, like, I'm richer than you. But but I'm not going to just come out and say that and brag about it, because to me, that's not what it's about. Right. So at the end of the day, I want to make means, not because, I live in a nice house, but it's not a mansion. Right. And I don't care about that. Like, look at, the bookshelves, we had to cut that off with the Sawzall, it's not Pottery Barn, but yeah, so for me, that's what it is, right? The more money I have, the more means I have, the more good I can do for the world. And I think, man, I was listening to your interview with Maurice Philogene, one of them, yesterday. And man, it's just like having an impact on another person. There's no greater feeling in the world, right? And regardless of anything, right? And if I don't have to worry about where my next paycheck's coming from, where my income's coming from, how much better of a person can I do? And how many other people can I lift up? And so I think that's just like the thing that I feel like these people are missing, is they're trying to pretend and portray something they're not, because at the end of the day, it comes back to the mindset. And I think that's the difference between me being able to push a deal across the line and somebody that's wanting to do a deal. And what frustrates me with seeing that stuff, and that's why I kind of start talking out about it, is because they're just posers, man. I'm a closer. So, I think that's the difference. And I think that's all I'm saying, is just keep it real. Just be who you are and be proud of who you are. And if you need to change who you are, that's fine. But yeah, man, that's the reality.
So John, you mean to tell me I can't passively invest in a 200 door deal and then, go online and just say I own 200 doors?
James, you can do whatever you want, man. No, yeah, like I said, I think it's misportraying what the person has done. And I think that's, that's kind of the point of it.
We're in agreement, John. I'm just giving you a hard time. Just giving you a hard time, man.
And I keep it real, if you can't tell. I'm not afraid to say what's on my mind.
Because Jerome and I've had that conversation in the past as well. I'll be like, well, how many doors do they? What are they doing? Do they own a piece of the doors, or do they own them outright?
I don't even think they own the door.
Hey, John, this is Tiffany.
Hey,
How you
Tiffany.
doing?
Good. I'm doing outstanding.
Definitely want to hear a howl before you get off the line. Your best wolf howl.
Oh man, I haven't drank something in a while. I hope I don't my voice doesn't crack anything.